Hello, everyone, and welcome to Business Depot Budget Breakdown with Beverages. My name is John Knight, and joining me today we have Jackie Reeves and Rebecca Mahalik. Thank you for joining me again, ladies.
Thanks, John. Thanks.
So, the budget, already you would have heard about there's a surplus. Already you would have heard about the cost of living focus of the budget, the talk about the impact of that on inflation, wages increases, and those types of things. But what about for businesses? Jackie, what's one of the big headline items?
So one of the first measures is the small business instant asset write-off. Most of our clients, or most of those listening, will be aware that temporary full expensing ceases 30 June 2023. So that's where basically any capital asset that you were buying that wasn't building works could be immediately written off, where your turnover was less than 5 billion. So that's cutting, but what they're going to continue is for businesses with a turnover of less than 10 million, they can get up to $20,000 write-off on eligible assets.
Was that less than 10, that one, or was that less than 50?
Less than 10 million.
Because there's so many different thresholds thrown around the place, isn't there?
And it's back to the pre-COVID days and probably some of those measures where it was for genuine small businesses, and it's the $10 million.
So it's sort of what was gone is sort of back, but with a threshold. So $20,000, same rules as previously, I understand, installed, ready for use. And when's that apply from?
1 July 2023.
Okay, so do we get too excited about that? How do we feel about that?
Look, I think getting too excited, probably not, considering most small businesses were able to write off, all of their pool balances, all of their assets for greater than 20,000 before then. So look, probably not, but still good for some small businesses who are hurting and might still have some capital improvement that they need to do in their business.
And so if I want to go buy 10 $20,000 items, can I write them all off, or is there a max?
No, per item, as long as they're not aggregated. It should be back to the normal instant asset write-off rules, would be my understanding. But again, we'll have a look at the detail when it comes out.
Yeah, like everything we talk about here tonight, obviously we've got to see legislation, we've got to see what's finally passed. There's a big focus within this budget about energy efficiency and the environment and those types of things. What about for small business, Rebecca? What's in there for that regard for small business?
So for small business has been announced up to $650 will be paid to small businesses in an energy offset. So if you are eligible, it will happen automatically in your next electricity bill. $325 will come from the federal government. The other half will come from the states. It will vary from state to state. Most of them will give $325 with, I think it's Victoria and ACT have got slightly different measures. Again, we'll see the detail of those in the next few days.
So they sound like they were negotiated with the states. So there's a bit of difference between different states on that. Also, I understand, Jackie, there's an additional deduction around if businesses invest in energy efficient items.
Yeah, that's right. So you're going to remember that in the previous budgets, we had the 120% deduction for digital adoption, and then we had the 120% deduction for skills and training. Following the energy theme of this budget, it's 120% deduction for energy efficient assets. Now that's for businesses with a turnover of up to $50 million. So similar limits to those other training and digital adoption boosts that we were talking about.
So correct me if I'm wrong. If I spend 10 grand, I will get an extra $2,000 deduction, which if I'm a small business that gets a 25% tax rate, that's worth what, 5 grand?
Yeah, don't ask me about maths, John. I do the law, you do the maths, but that sounds right. It's not something too exciting.
Well, so if it's 10 grand, we get an extra 2 grand deduction. So it's an extra, $500 of tax, basically. So I struggle to get excited by that.
Me too.
Do you agree? You agree, Rebecca?
Look, none of these measures so far are anything to really get too excited about. It's going to probably cost us a little bit more money than we're actually going to get.
One of the most commonly talked about items of recent times around tax is the FBT exemption for electric and plug-in hybrid cars. Did I see something in this about that's actually going to come to an end?
Yeah, so they're talking about ceasing that from the 1st of the 4th, 25. So from all of us who love FBT years, that's the end. That's the start of the 2026 FBT year. So kind of a little bit disappointing because I think that they were trying to drive, the electric vehicle market.
Yeah.
And a lot of people were getting excited about that they were going to be FBT exempt, of course, still reportable. Yeah. Still meant you had to keep logbooks and records and still prepare the calculation, but your employer's not paying FBT on it. So yeah, only if you're looking at those measures, get in before 31st of March 2025.
So 31 March 2025, if you're going to buy an electric vehicle within your company, for that to be FBT exempt. I know some companies are looking at how they do that with their employees to be a bit of a benefit for them. I think there's an increase in the heavy truck tax or something or other. There's probably a technical name for it, Rebecca.
Yeah, it's called the road user charge. So this is a bit of opposite to what we've spoken about so far. This is something that's going to increase, not decrease, and it's really still in line with that energy efficiency stuff because, you know, heavy trucks are not energy efficient. The increase on that tax is going to be 6% over the next couple of years, and that tax is actually used to calculate out what truckers' fuel tax credits are, so they will decrease over the next
So who's that
years.
going to impact, like truck drivers,
Delivery
companies, or
anybody eligible for fuel tax credits?
Yeah, okay. And then one of the tricks always with every budget every year is what's actually new or something they've announced before or something they're actually scrapping from a previous announcement. I know one of the things we were really curious about previously was what they called a patent box. What was it?
It was like a tax offset or a reduced tax rate for patent box initiatives.
Yep. And so what's happened with those?
So I think you'll probably remember when we talked about last budget, the October budget, the first Labor budget, is that we said they were very silent on what they were doing with the patent box measures. They've just announced that they're going to be scrapped. So basically this was a reduced tax rate of 17% for certain eligible patents. So any income that you derive from those eligible patents, they were only going to be taxed at 17%. And they have just announced tonight that that's scrapped.
And so that was, I suppose, an incentive for innovation within business, given it's patent related. Take that as an indication that they're less focused on business innovation?
Oh, I think maybe it wasn't going to have a lot of take up and they've tried to get a budget saving measure in there is probably my take on it.
Yeah. So one little thing in there, some of you may pay PAYG installments. So these are your income tax installments that you pay in advance every year for your company or for yourself individually. Usually, well, they were going to be indexed by 12%. They've announced within this budget that they're going to cap that at a 6% increase. The 12% is driven off previous inflation and so forth. So they're just saying that's a bit too much of an increase in tax to take up front in advance. I think there's also some talk about international students, Rebecca, that might have an impact on businesses.
Yeah, so if you are employing international students on a student visa, working hours that they're allowed to do is going back to pre-COVID. So it's going to be capped again at 48 hours a fortnight. That's a reduction of 8 hours a fortnight that we saw during COVID. It does not impact aged care workers. They will still be able to work those more unlimited hours.
So that's probably hospitality, agribusinesses, those types of things.
Yeah, retail businesses,
a
few different businesses out there are going to be impacted by that.
Okay. I know some of our clients or some of our listeners out there might be within that property development space. And in particular around the build to rent, there's some further incentives and support for the build to rent program. I think they're increasing the capital write-off or something, Jackie.
Yeah, so normally you would probably on a resi house you'd get 2.5% on your capital works deductions, which is your actual building costs.
Yeah.
And they're increasing that to 4%. And they're also decreasing some of the withholding tax on the managed investment trusts.
One of the other little things I thought in there for business that I thought interesting, it might be an investment opportunity for somebody, is just, it sounds like a heap of money being thrown at the hydrogen industry and being able to export hydrogen. So if that's the business sort of side of things, not too much to get excited about, if I'm completely honest. There is a lot in there around from an individual perspective. Rebecca, what are some of those things just at a very high level that they're doing for individuals?
Yeah, it wasn't surprising it was individual focus because of our cost of living concerns at the moment. Job seeker rate has permanently increased for all recipients to $40 a fortnight. In addition, young people are also going to get a boost of $40 a fortnight on ab-study and youth allowance, and rent assistance is increasing 15%, which will be a maximum of $31 a fortnight. So little amounts, but they really still do help when you're having cost of living pressures.
And there's a bit more around Medicare and medical expenses, Jackie.
Yeah, so I think there's going to be some increases around, subsidised medication and increased bulk billing. So, I think where things are really hitting hard for individuals, where it's, cost of living, rent, medical, is they're trying to really give some increased support to those areas.
I mean, if there was anyone you wanted to give some money to help them with cost of living, it's the people that are impacted by this. I think including there's some changes in there around single parents,
Yeah.
I think they're extending your eligibility from not just 8-year-old, but out to 14-year-olds. What else we got in there for working people?
So childcare subsidies increasing. So if you are on less than $80,000 a year, then your childcare subsidy increases to 90%, which should effectively increase the other rates for once you start earning under 80,000. So good for working parents out there where the cost of childcare can sometimes be quite prohibitive.
Is there an income threshold on that 90% childcare subsidy?
80,000.
Yeah, okay, and then it sort of tapers up like usual. Above that, aged care workers are getting an increase in their award as well, Rebecca.
They're getting a minimum wage increase of 15%, which will work out to some nurses will get something between $8,000 to $10,000 extra a year, which is great because they do such wonderful work.
Yeah. So there's lots of things in there that we've talked about that are costing money. There's lots of spending in there at the moment, and it's probably one of the biggest questions we had going into this budget was the government, even though they promised it in the election, going to keep the stage 3 tax cuts. Now, the stage 3 tax cuts introduces a big threshold in the middle of the individual tax rates. I think it's from $40,000 to $200,000. Will be taxed at 30% from 1 July 2024. Now, they have kept that in place, so we are still working towards making the most of those tax deductions or those tax rate changes, thresholds and rates from 1 July 2024. What else have they announced in here as to how they're going to pay for this, Jackie?
So I think it's been very broadly announced around the superannuation increase. So where you've got superannuation balances of greater than $3 million, that the tax on your earnings in those funds is going to increase from 15% to 30%. Look, I think the biggest thing that's really hard to swallow for a lot of people out there is the initial proposition is that it's going to be on unrealised gains. And that is just really contrary to the way our tax system works. I think this is one of those things that it's watch this space. Yeah. There's going to be a lot of pushback from the SMSF industry. Our own Megan Kelly will probably be driving some of that pushback too, and Simone, because it's just not really how our tax system works. Yep. And particularly if you don't have liquid assets in your fund and you've got unrealised gains, so you think about a fund that's got a lot of real estate in it, how do they liquidate those assets to pay that extra tax? And I think that's just going to be a watch this space, but that
it
has
sounds like
been
the problem there is
publicised.
really the practicalities of being taxed on unrealised gains.
And the inequity of that.
Yeah.
Our tax system doesn't really work on an unrealised gain system. It works on a realised gain system. You have the cash to pay, except in certain circumstances. But yeah, I think a lot of people are finding that a really hard measure to swallow.
So if you've got more than $3 million in super, if you're in accumulation phase, paying 15% tax, your tax rate, and your value is over $3 million, goes up to 30% on the excess. If you're in pension phase and it's 0% and you got more than $3 million, do you get 30% over and above the pension phase as well?
Well, that'll be subject to, and John, you're asking me superannuation questions. Well, the thing is that you only have a certain amount in pension phase now with the caps in place. So the answer to that is yes, but and no doubt Megan will be putting out a number of
so watch this space. We've got to get the final legislation on this. It's a 1 July 2025 start date for that as well. Other things they're doing to pay for it, they're picking on all the people that are politically safe to pick on, multinational companies, implementing I think it's the OECD recommendations of a minimum global tax rate of 15%. They're increasing the tax on tobacco.
Sorry, that was the one I was joking at. I was laughing at, John.
And they're also mining companies, and they're increasing the resource rent tax as well. So they're really only picking on a few people to pay for these things. So in summary, SGC as well is one other thing I do want to just quickly mention. At the moment, companies, when you pay your superannuation or when you increase your entitlements for superannuation for your employees, that will now be paid every pay run. From 1 July 2026, I think it is. 2026. So you're now going to have to fund that superannuation a lot quicker. I don't think anyone's going to have too much objection about that. Obviously, businesses that are low on working capital won't like it because they've probably been using that within their working capital. But it's something that is coming, and it's probably always going to be inevitable.
not surprising with all the changes and releases of single touch payroll that I think really as business owners and as tax and accounting advisors is that we knew was on the horizon. And I think the question mark there will be is that, how far away is pay-as-you-go withholding, so the tax that you withhold from your employees, like that's potentially not going to be far behind.
It's pretty much only a matter of time, isn't it?
From July, pay-as-you-go withholding is actually going to be pre-filled on activity statements using STP information. So
okay, so again, we're going to be paying the ATO a lot quicker, which will solve their debtor problem. I wish businesses could do that. Ladies, is there anything I missed?
We did not mention the $500 that individuals, particularly those on pensions from the government, that will be receiving as their electricity offset. So $650 for businesses, $500 for eligible individuals. About it.
And I think there's some loans as well, isn't there, to put in energy efficient items in your house?
Yeah, that's right. So low interest loans to improve energy efficiency. It's going to be like double glazing, solar panels, just for people to help combat, their increasing energy costs. That the government will be able to support those loans to do it.
Very good. Any parting words? Any conclusions?
It's probably a greener budget than I imagined. I always thought it was going to be a budget for the people, given what's going on, but it is a very green and people-orientated budget, which it's not a bad thing out of the last couple of years. So I'm okay with it.
Good. Jackie?
Your choice of jacket was
fitting. That's right.
As always, the tax nerd on the panel. I'm a little disappointed that there's no fundamental tax reform. I don't see that we're going to see that in the next, probably in my tax lifetime, that we're going to see, increase to broad-based consumption and reduction of company tax rates and, personal tax rates. That's what I think a lot of us are looking for instead of these measures, or the ATO's practice guidance where they want to curb behaviour. We're really still not seeing fundamental tax reform, and that's kind of a little bit disappointing to me.
Pretty safe. Although don't underestimate the individual income tax rate changes. Like having such a big threshold in the middle there does fundamentally change our tax plan.
Yeah, it does, and I guess it changes around, your choice between, the company and trusts, individual trusts, whatever. I still want to see more tax reform. Yeah, but no one's going to have the confidence to do that. Hopefully. And probably my parting comment is my concern, probably more than anything else, is how all this spending, I've got no problem with where the money is going to from a perspective of their people who need to have cost of living pressures released. But I am concerned about the impact on inflation because business and everybody at the moment, the biggest impact is inflation and wages pressure, I would say. You guys agree?
Absolutely.
And I'm not confident that spending more is going to ease that pressure on inflation. What does that therefore do to interest rates, and how will the RBA look at the budget when they need to meet in the first week of June? Guys, thank you so much for those that joined us. The recording of this is going to be available on our LinkedIn page, and of course we'll also send it out on email, or at some stage tomorrow you'll find it on our website under the blog section, which you can find at businessdepot.com.au. But of course, if you ever do have any questions, feel free to reach out to either Rebecca, Jackie, myself, or your usual contact here at Business Depot. We'd love to help you out. Thank you, everyone.